Hello, and welcome to Virtual Investor Conferences. My name is Anthony Kraus, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Terra Resource Corp. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Gerald Panneton, Chairman and Chief Executive Officer of Terra Resource Corp, which trades on the OTCQB venture market under the symbol YGTFF and on the TSXV under the symbol YGT. Welcome, Gerald.
Thank you very much, Anthony, and welcome everybody that is present for this conference on the OTC. We very much appreciate OTC support to share our story with shareholders, viewers, investors in the US. It's always our pleasure to be able to update you. Of course, Terra is a company focusing in Canada, mainly in the Northwest Territory, precisely in the town of Yellowknife, where we have and are looking for numerous multi-million ounces gold, high-grade gold deposit in Yellowknife. With all of this, I would like to move on to my next slide, which is basically the forward-looking statement, as we are a public company, and of course the cautionary statement, before jumping into the presentation and giving you an update. As I was mentioning, our project is located, we're focusing in Yellowknife. Main reason, high-grade gold camp, infrastructures in place, much cheaper to do our drilling when we focus on our exploration drilling. And of course, thank you to our shareholders. Again, this fall, we raised more than almost $2.5 million that should be closing next week. Mainly to our shareholders that have been very supportive, talking about Ingle Snyder from New York, US Global, McKinsey Fund, Eric Sprott, Newmont, and of course all the other smaller investor that has contributed to our private placement. We do private placement for a reason. We cannot afford to do the traditional bought deal that you see in Canada, mainly due to the fees, the legal fees, and of course the finder's fee that the broker charge you. So we save, I would say, on a deal of $5 million, we save 20%. So doing it ourselves is always much, much better. With all of this, I'd like to move on to the strategy. But for me, when you are a company that focus on proven exploration and proven work, I cannot stop. I mean, you can Google what I've been accomplishing during my career. Mark Brown is the same, has done quite a lot. I surround myself with a small team now because this team is consisting of 2 mining engineers and, of course, Joe Campbell, who founded the company back in 2013 when he started to be involved in the Yellowknife camp. Why the Yellowknife camp is very, very simple. The Yellowknife camp is a very simple focus strategy for our shareholders. We focus on high grade. We focus in a place where there is infrastructures. It's a Canadian asset. It's tier 1. The grade that was mined along the Campbell Shear was 16 to 22 grams. There's infrastructures, a town of 20,000 people, airport, hydropower. You don't have to go. And plus, one of the acquisition we made at the beginning of my tenure in Terra was the Con Mine option, which took about 2 years to negotiate with Newmont. It's a mining lease with a brownfield status, and that status will allow us to step forward into production in a much, I wouldn't say that you avoid the permitting process, but at least you shorten the permitting process. And that's an important point in our story. And of course, the track record. The team is small, but has a good track record. And our focus is, of course, going back to the property size. We cover pretty much all of the Yellowknife camp. Campbell Shear produced 14 million ounces of gold, and that's very important. The giant mine was shut down in the late 90s and was extremely refractory. And it's a problematic mine because of the past operator. The Con Mine was very well operated by Miramar and then purchased by Newmont in 2008. And since then, they've put a lot of money cleaning up. The site is basically 98% reclaimed. We're going to look at the picture in a moment. But just to give you an example, there's a tremendous potential. This property has not been explored for the last 20 years properly. And already in the last few years that we've been exploring the property, we've added something close to 2 million ounces of gold at high grade, with an high grade focus, of course. Now, going back to our catalyst, our timeline, what can the investor expect in 2025? Well, we're targeting to have 2 million ounces on the con mine. We only need 1.5 in our deal with Newmont, but I'm putting my threshold at 2 million ounces. Plus, there was 650,000 ounces left in the mine when they stopped operating. So that's very important. It's a very important point because we're keeping this as a back pocket. We're not using it as a threshold. But could you imagine if we find two and we had 600,000 ounces, we have a 2.6 million ounces deposit in one place on a brownfield project on the con mine option. And our target in 2025 are mainly the south of C1 shaft near surface, between surface and 700 meters, where we already outlined 540,000 ounces at 8 grams, which basically is the core of starting the mine at the beginning. And the potential, of course, is to go after the deposit down plunge, which is still open, over 1 kilometers long and over 1 kilometers depth. Now, when you look at catalysts, we've already done a lot between 2021 and 2024 since we optioned the property from the con. $11 million, 35,000 meters of drilling. And what we're trying to do and achieve over the period of 25-26 is another 40,000 meters of drilling. Of course, the share price doesn't help. We're raising a small amount of money as we speak, but at least we keep the drill turning. And that's our goal for 2025. Hopefully, the market will give us the rewards that we should have, being currently valued at less than $5 an ounce. Of course, once we get our threshold, we will be able to do a preliminary economic assessment, PFS, feasibility study, and followed by permitting, and then develop the mine and be in production in a very short term. Of course, this is a kind of an example. Those dates at the top could vary a little bit, but that's what it would take for an investor. And every box is kind of an exit point. You've reached a milestone, the milestone of getting 2 million ounces, the milestone of the feasibility study, the milestone of acquiring the con mine, the milestone of developing the mine and building the mine. So you're basically de-risking the project as we go along. Now, little bit about the property itself. You can see the town of Yellowknife, north of the con mine. You can see the aspect of the surface right that we have. It's a brownfield project. It was developed before. So redeveloping a mine on top of an old mine is always easier. We don't have to build a settling pond. We don't have to bring a water treatment plant and a warehouse, offices, all the road, all the ditches. We know exactly where we'll be putting the tailing again and the process plant. So this is not like a greenfield project where you need to prepare and re-permit everything from a green environment all the way through civil engineering and site preparation. A lot of the money has already been spent on this project that will straightforward the redevelopment of the con mine. But again, if we don't find 2 million ounces, we would be walking away from that property. But the pronostic of finding 2 million ounces is excellent. Look, the Campbell Shear and the Con Shear together on the con mine produce 6 million ounces, 1 and 5, at grade of 20 gram and 16 gram. And when you look at those structure from a vertical point of view, we're going to move and show you what the long section looks from the north to the south looking west. And when you look at it, you can see the 540,000 ounces that we've already outlined, mainly in the yellow red zone. We still have some work to do, and that's why we're proposing to grow and back and drill again in 2025 along the Campbell Shear, south of the con mine. Some of the potential is also at depth. So we want to do and go back at depth because we believe that there's a tremendous potential. And let me show you this. So when you zoom into this main Campbell Shear zone, you can see that everything that is yellow, orange, and red is above cutoff grade of 20 gram. 20 gram is like 6 gram over 3 meters, 7 gram over 3 meters roughly. That's what you need at depth to be able to sustain an economic development of the mine. Our first hole drilled in 2023, 55, intersected 13 over 1.7, which is roughly about 23 GT, which is exactly above your cutoff grade. So we prove that the zone is open at depth. So our next hole was to drill deeper, which is 56. And the master was complete back in July of this year. And when you look at hole 55 and hole 56 side by side on the section, you can see that we intersected the Campbell Shear. And unfortunately, our hole 56 remained too steep and did not intersect the zone at depth where we planned to intersect it. So we stopped the hole at 3,000 meters. This hole now will be served as a master hole, a master access, and will be branching off, wedging, we also call it in drilling terms, to test drill the Campbell Shear, starting at a depth of approximately 2,600 meters. That program is now funded. That program will start in January, and we look forward to be able to share the news of the first two wedge that we intend to do in the first 6 months of 2025. Now, if people were asking me, what are you after? What are you after? Are you after some mineralization that is spectacular? Or are you after something that... No, look, this is one of the most deepest cross-section in the mine. And you can see from the underground drilling, the style of mineralization that is in the Campbell Shear at that depth. That stope actually was not fully mined. There's still some ore in it that can be retrieved. But look at the grade, 20 gram over 7 meters, 22 grams over 12 meters, 80 gram over 7 meters, and a spectacular 534 gram over 20 meters, which include a section of 3,000 gram over 3 meters. Usually in a reserve calculation, you bring back all those interval to less than, say, 100 gram over 3 meters. You don't use 3,000 gram. But just to show you what is 3 kilogram of gold over 3 meters, is that you go in the stope, and the stope is yellow. It's all gold. This is a very rich jewelry pocket. Those pockets exist in the Yellowknife Campbell Shear mine. This is a con mine example of very, very rich area of the mine. And when you go back to what we're trying to do, it's extending this deposit at depth below 1,900 meters, which is the depth of the current shaft, which means that from the bottom of the shaft, we could drive a ramp and access all of these ore without sinking the shaft any deeper. Ramping is a very cheaper way to access ore than sinking a shaft, which takes a lot of time. Give you an example. The Robertson shaft, if we decided to sink this shaft today, will cost $200 million and take 3 years. So the saving that we have in terms of time is important. But what's very important is to go back to this slide again to show you the overall picture again. That shows that we already have 500,000 ounces near surface, and maybe more with our drilling in 2025, following on some good intercept. We have already 5 to 6 years of operation near surface, which means we can use our cash flow to develop the mine further down and drill better from underground the resource that is outlined below the current mine. We can go, the deepest mine in Canada is 3,400 meters deep, the La Ronde mine in Quebec. There's no reason for us to be able to go to 25, 26, and even eventually 3,000 meters, because those deposits do not stop. They are continuous, they're Archean, and they go and extend down to 5, 6 kilometers depth. Now, with all of this, this is an example of the shear zone we want to share with you. But do we have just the con mine? Of course not. We don't have just the con mine. What's important about the con mine is the potential. 2-3 million ounces, 15 grams, 10 grams. Gold is $2,600 an ounce. It's an amazing environment for underground mining and high-grade deposit, because you're dealing with a small amount of rock and a huge margin. And that's what's make those deposits so searched for. People are claiming a lot of big low-grade deposit, but it's all about volume and margin. The margin is very small and the volume is very high. So completely the opposite of high-grade deposit. Our focus, and I can tell you that after building Detour, my mindset is changing towards high-grade mineralization, less capital, better margin. And again, just to show you, 20 kilometers north of town, some of the asset that we have in Gold Terra already own 100%, only 20 kilometers north of town, which means that ore can be trucked to a mill, built on the con mine. And you have grade up to 32 grams over 3 meters. We're never going to find 1,000,000 ounces necessarily there. Maybe we will. But what we can find for sure on those small intersections, which are near surface, is maybe 300,000 ounces, 500,000 ounces. And altogether, they basically become very good satellite deposit that could be used at the mill as custom mill feed and crank up our production, say, from 100,000 ounces at the con mine to 150 or 200,000 ounces a year, giving us a very nice profile of production based on a 2,000 ton per day. So the future is in front of us. The only thing that we've been struggling with over the last few years is money supply and better drill program. We would be drilling, having 2 rigs nonstop, 12 months a year, if we had the money supply to support exploring this project, which is very, very much underexplored. And with all of this, we'd like also to have a word about, I just came back from Yellowknife. I was there last week. I was there again in October. I go about 3 to 4 times a year. We meet with everybody. We meet with the government. We meet with the First Nation if they're available, with their contractor, the Tancho. We are always there and present. We do a town hall at least once a year and welcome everybody in town to hear about our project. Yellowknife is a mining town that was discovered and built on in 1938. It's a great, great story. Now, the town lives on supplying and servicing the diamond mines of Northwest Territories and other projects such as Goose Bay with B2 Gold. So there's a lot of different projects in the area that are supplied or serviced by Yellowknife. But it would be nice, and I think we get the support. I mean, whatever we are in the public domain, we hear a lot of, I would say, 99% support towards redeveloping the con mine in Yellowknife. And at the end of the day, our goal is to produce gold, and hopefully it will happen in the near future. And I'd like to thank you, everybody, for spending your time, your precious time, to look at Gold Terra presentation today. Thank you very much, and I'm going to be opening the Q&A session. Thank you. Any question? I'm going to go with one of the first question. The first question is in your opinion, a better opportunity than Detour? How do you compare Detour and Gold Terra is a very interesting question. I'd like to say that it's not comparable for a couple of reasons. At Detour, our timing in the gold price went from $450 to $1,900 an ounce. We had a 300% increase in gold price from the time I started the company to the time we put it in production. We found 30 million ounces at 1 gram. We drill, and we had a concept and a vision of an open pit, and it became a huge project. Now, today it's the largest gold mine in Canada, but the reason you're making a lot of money at Detour is like you're producing 700,000 ounces a year. But 15 years ago or 14 years ago, we spent $1.5 billion US to build the mine. It was a big support in a very good gold window or a good time frame for the gold price. So it's not always easy. What I like about Gold Terra, different than Detour, and don't get me wrong, Detour was a big undertake and we delivered. This one is a different undertake. We're focusing on margins, which are much higher. If we produce gold and our break even, say, is five gram an ounce, right? Because gold is $2,600 an ounce or $2,700, so it's roughly almost like you're looking at $80 to $90 value per gram of gold. And in today's world, if your cutoff grade is like $200 or 3 grams, there's a huge margin, there's a huge profit. The amount of money you're going to put in as well is not that much to build a mine. But we're not going to produce 600,000 ounces. We're going to produce 150. But when gold price goes down to $2,000 an ounce, say, for whatever reason, we will be okay. So I think what's very important in looking at Gold Terra, I don't regret anything about Detour, except maybe the way it finished. But at the end of the day, Detour was a big undertake, and it was a big mine. Gold Terra is more about the finesse, the high grade, and the margin and the profitability of the mine, where more people can make more money, but in a different way. The next question that I see is the drill program for 2025. Like I've mentioned before, our program basically is a focus on the Campbell Shear, on the Con Mine option. We would love to go 20 kilometers north of town, but we are not in a financial situation to have 2 or 3 rigs. I mean, we raise money this fall. We are going to have a drill program next year. Hopefully, we can even raise a bit more money by the end of January, and we can be even more aggressive. But so far, it's very difficult to do everything I want to do. So we have to prioritize, and our priority is the Con Mine because of the Con Mine option in the brownfield. So to answer your question, I think it's answered in one of the slides, which is basically the slide that is talking about the timeline and the catalyst. The first most important thing over the next 2 years is the 2 million ounces threshold on the Con Mine, and maybe some more north of town if we get a better money supply to drill more. Thereafter, we find enough ounces after our next MRE. We've been already doing 3 MRE, mineral resource estimate. The last one was filed in September 2022. Hopefully, we're going to have one by the end of 2025 if we do enough drilling. And with this, we would love to be able to do a PEA probably in late 25 or early 2026. That's our goal. Again, do we have all the permit? So the brownfield project, the question on permitting. First of all, we have all the permit to do the drilling we're doing. So all of that is already in place to do all of the drilling we need to do. But what is the Con Mine bring to Gold Terra is a brownfield project. People ask me, how did you manage to build Detour like in 6 years from IPO to gold pour? Because that's what we did at Detour in a very good time frame. And that includes 26 months of construction. So how did you manage to do this? Because the first action I took in 2007 after the IPO was to negotiate and purchase the mining lease from Gold Corp Canada, because the deal with Pelangio did not include the surface lease. And I saw that it would be easier to negotiate the purchase of the mining lease very early on before you find all those ounces that we found at Detour. So basically, when you look at the parallel with the Gold Terra story and Con Mine is very simple. The Con Mine has a brownfield project, has a surface rights, has the mining lease, and that basically can shorten your permitting process by 75% to 80%. You still have to represent the reopening of the mine with the mine schedule, the feasibility study, supported by a feasibility study, with the mine plan, a closing plan, and of course, an environmental impact, which is basically on the mine site because you're not going elsewhere. So you kind of like have a more set focus permitting process on an already disturbed industrial land, which is easier than building something in an area that you have to disturb for the first time. And that's the biggest difference. There's a question, again, interesting enough, about what will be my all-in costs. You know very well that I cannot predict this. Okay, we do mining in Canada for about $200 a ton underground. So you could, you could extrapolate. You could put all of your costs. Today, I think the overall cost is $1,600 an ounce, all in, if you look at an average. But some mines produce at $2,000 an ounce. Some mines produce at $1,200 an ounce. So if you use $1,600 an ounce, all in, and you use a depreciation of, say, $300 million US to build a mine, divide by 2 million ounces, that's $150 an ounce. So you'll be looking at $1,500 to $1,700 an ounce, depreciated and all built. So that's roughly the way I would look at it. But that's from until you do a PEA and you submit your PEA, it's all speculative. And actually, until you start mining, it's still speculative because mining is a tough business. I'll be very honest with you. And you need to surround yourself with very good people to achieve good production costs and things. But we do have a lot of advantage. We're in town. You can compare drill costs and operating costs. So when your drilling costs are $200 or $300 a meters, compared to projects that are remote at $700, $800, $1,000 a meters, your all-in cost will be lower because of the infrastructure already in place. That's the big advantage. And yes, the gold brick that you see on the presentation is from Detour, and it's me holding it. It's February 2013 when we poured the first gold bar, 6 years and 1 week after the IPO. So it was a very good success. I don't see any more questions. Hopefully, I was able to answer all of yours. And let me know if you have anything else. Otherwise, if there's no more question appearing on my screen, I will be, thank you very much for attending the presentation and being there. And I look forward to meet you again in the future as shareholders.